What's up, guys? Welcome back to the channel. My name is Frank Mularcik, and in this video we're going to be going over my options account and just looking at some of the trades I've been making, looking at the overall value, how much income I'm getting off of that account over the past month or two. I think the last time I made a video on this account was sometime in December, and at that point I was starting to see some pain from a DraftKings cash secured put that I had done, and since then I guess we could just say that there's been a lot more pain with that, and we can sort of take a look at the account right now. We're sitting around $4,400 and down 2% on the day. But if we go back 3 months, down about 30% over the past 3 months. You can see at the beginning of November I was around $6,100, and if we go back a little bit further, you can see kind of how bad that was. I was up above $6,200 at the beginning of November there, and things just have not been going well for me over the past few months. But overall, I think, there's places I can recover, and this has definitely been a great learning experience. So right now I have these options on. I own 100 shares of DraftKings, and basically I own those shares at an average price of $41 per share. That means I'm down about $1,800 just on these shares. So if we go back and we do a little math, if we were pretty much breaking even on those shares, $1,800 added on to this would put me right around $6,200. So there's some other positions that have lost me some money, and I've gained back some money from some of those as well. But overall, the DraftKings, it's what's really bringing me down. And I also have a poor man's covered call on this MJ ETF. I have a $9 leap out to January of 2023 here. My average cost was $3.50, so I'm down on that a little bit, about 10%. And I also have, if we look at our position, I have a short call out to March 18th at the $11 strike, and the stock price is getting pretty close to that, but we'll see how that goes. I'm definitely down on that short call overall, but I also already sold and closed a short call for somewhere in February expiration date and got some profit off that. So overall, it's just about collecting generally small profits from the short calls, and then hopefully at some point you can close most of those out for some sort of profits, and then at some point you can close the long call out for a profit as well. So those are my that was my poor man's covered call. Obviously I have this covered call on DraftKings, but the stock price is just so far away from my average cost that the premium is just really hard to get. And so right now I'm out to the March 18th date, and I only got $24 of premium for this. So I probably should have been a little bit more patient, but that's okay. And I think eventually DraftKings will recover, and I'll be able to sell some calls more easily. But for the time being, that position is just kind of going to be sitting there, and there's not really much I can do about it for right now except just wait a little bit. And then I have definitely been getting into credit spreads a little bit more. So I have this Square credit spread, and this one is at the $130 and $125 strikes. As you can see, Square is currently at $108, so significantly below that, but I'm all the way out to March 18th on this one, and this one was actually a roll from a previous credit spread. So basically, hopefully at some point we'll get some more theta decay, and we'll also get Square to move back up in price some as well. That would be really helpful, and hopefully we can end up with a profit, or at least a lot closer to breaking even on that overall trade. And then my last trade here is a $15 put on Palantir, which they're currently around $13.50, and this was also a roll from a previous trade, but I'm only out to the February 25th strike. So hopefully we'll start to see some theta decay help us out some more here, and hopefully Palantir will also recover as well. So if we look at the Greeks, theta is around negative 0.03, so ideally that means this position will, if the stock price stays the same, this position will earn me roughly $3 per day. So within the next 2 weeks, theoretically, if theta stays the same, which it probably won't, this position would go down by $30. So that means it'd be worth about $160, and I'd get at least some profits on this position, and overall on the trade it would still be negative. But I think, a lot of these trades are just in kind of more speculative companies and stocks, and that's definitely something I don't want to be as involved in. Previously, that was kind of where I was at and what I was doing, just because of the nature of my account. It's pretty small, and if I'm just going to be selling cash secured puts, I need to sell them on companies with lower share prices, and generally some of those are more speculative. But I think in the future, in the next few weeks, I'll be able to open up a few more spreads, hopefully maybe one or two, and just kind of diversify my account among kind of smaller positions. And we can also look at my spreadsheet here. I've been keeping track of all my trades, and basically I'm keeping track of credit spreads just kind of as a one position as opposed to two, where really I sold a put and then bought a put at a lower strike in most cases. But I'm just kind of, for my keeping track of it, I'm just looking at it as one position. So these are all my trades. If you want to stop and look through them at all, I have been doing some credit spreads, some cash secured puts, obviously the covered calls on my MJ Leap and the DraftKings shares. And the funny thing about that Square credit spread is I basically had this one right here that was essentially a day trade, in which I got $30 of profit essentially in one day off of $500 of collateral. And then pretty much a few days later, I tried pretty much the same trade, which I don't know why I necessarily wanted to do the exact same trade, but I sold that trade again and took a big loss on that one. And then right now, the next one that I opened up that I kind of rolled out to, even on that one, I'm still pretty much in the red, or yeah, I'm in the red a little bit on that one. So I also at some point decided to try doing like credit spreads on the indices, just one day expiration. And I did a few back up here, and just get a few bucks at a time, which it's better than nothing, and I'm only putting $100 at risk. But the thing that seems to be happening now is right now I'm working full time, and so I just don't have as much attention to be able to closely monitor it. And that's something that I realized that I really need to closely monitor more, I guess. So I think I had like one or two of these that went very poorly. So this one right here, I lost like $44 on this QQQ credit spread, and then I also did one on SPY that I lost like $30, $20 on that one. So I've kind of stopped doing those just because I recognize that I just don't have the time, and I can't pay attention to it as closely when I'm at work. So I've kind of stopped doing those, and that's probably a good idea. And we can look at sort of premium realized and the portfolio value over time. So these are the last few months, November, December, and January, all very red, and pretty much negative premium realized in January. We can look at the last few weeks. We were realizing some premium for a few weeks, and then we also had some rolls where we lost some or realized some losses essentially. And then at this point, it's just kind of, I don't really have any money to put on new positions, so I'm just kind of trying to wait for theta to help me out, and wait for stocks to recover a little bit, and hopefully let me realize some more premium. But the really cool thing I think is, or it might be cool, it might just be sad, is that in 2021 I realized a total of $1,582 of premium in my account, which is honestly, I think that's pretty good, because I basically started 2021 with $5,000. So if we just take that divided by 5,000, or I started in February of 2021 with $5,000, so not even the whole year, basically realized 31% of premium. The problem is my account is down like 10%, 15%, because I have all these unrealized losses in these DraftKings shares and other things like that, and I've realized some losses in January as well. So overall, 2021 was mostly a good year, and I started to have some problems at the end of the year, but overall, I think I learned a lot from that. Mainly, I think I learned that I definitely account sizing or position sizing. The DraftKings position was just way too big for my account size. It's like 50% of my account essentially. So that's definitely a really bad decision there. And then also just kind of being involved in those more speculative and more stocks that are generally maybe more susceptible to retail investors or sentiment that can move quickly with retail investors or even institutional investors. But generally, those companies, sentiment can move rather quickly, and so they can have pretty quick moves in the short term. So it's, that volatility allows you to capture more premium, but it also comes with a risk. And I kind of, saw that opportunity, and I ended up getting burned a little bit. So once this kind of blows over, hopefully within the next few months, I'm definitely going to start, trying to be a little bit more conservative. And, I would say through a lot of 2021, I felt pretty conservative in my trades, and I was still able to realize like 30%, which I'm really happy with. So that kind of just shows me that I don't have to do anything fancy. As long as I pay more attention to my position size, I think I'll be good. And I think I can, just be fairly safe with a lot of my trades and not have to worry about wrecking my account kind of like I did. So at the end of the day, it's not that big of a deal. I did go into this whole options thing like knowing that I definitely wasn't guaranteed to make money, and I was definitely a good chance that I would lose a decent amount of money. And for me, haven't added any money to my account since the beginning when I started basically a year ago, the beginning of February 2021. And essentially the reason for that is I just want to, like the first year I made some money, and then now I've kind of lost it all. But the first year was definitely a great learning experience, and I'm still, learning and getting better. And it's kind of the same thing with my dividend portfolio in the sense that right now the amounts of money I'm dealing with aren't really all that significant in the grand scheme of things, but it's giving me a good opportunity to learn in the stock market, doing these trades and learning from them, and hopefully I will in the future be a lot better at them when I'm dealing with larger amounts of money. And so then I will be able to really capitalize on these strategies. So let me know what you guys think of some of these dumb mistakes I've made. If you have any pointers for how to avoid stuff like this, I guess, or if you just want to share anything about your options journeys in the comment section down below, I'd love to hear it. But just want to thank you for sticking around to the end of the video, and I'll see you in the next one.